Episode 2, live from Staking Summit in Dubai. And my guest on the second episode is Crain, the CEO of Chorus One. Chorus One is one of the largest validators in the industry. Nice to have you on, Brian.
Yeah, thanks so much, Yuri.
In today's episode, I want to talk about a tweet that you published very recently. It's about why token launches are a scammer's paradise. So my question for you is, what's the issue that you see here with token launches in the industry?
Yeah, okay. So I wrote a tweet and now we have to talk about it and hope not to upset people, right? I think there's like so many different reasons like why they are, but like first of all, on a high level, if you compare like a startup, the normal traditional startup with a crypto project that has a token, the one big difference is if you build a startup, you're gonna make money when there's like some kind of exit, right? And then the exit would be something like, well, maybe IPO. Now that's very hard and far away, right? And you have to show like real revenues, real traction, 10 years of work. Or maybe you're gonna sell the company to somebody else, someone's gonna acquire it, and of course they're gonna look at the company and do a lot of due diligence and go super deep, and then maybe they buy it if there's like something really there. Maybe there's like some rare instances where someone can just like hype something up and then get a bunch of money out and it collapses. WeWork is maybe an interesting example where like Adam Newman somehow managed to extract quite a lot of money from this thing, even though the whole thing collapsed and everyone else lost money. But generally that doesn't work, right? So generally you have to really build something of some substance, right? Otherwise you're not going to make money. But in crypto, this is very different, right? In crypto, you can like launch a token, the token can start trading, and you can potentially make money from this token trading without ever building something that anybody actually, uses or that generates, real revenues, or that's kind of like a business or something of lasting value. And then, of course, that's super common. And I think you have then different consequences of that, right? One is it can just attract people who literally just want to make some quick money and, do some scam, and they don't even try to build anything of substance. But then you can also have the thing that's probably more common, which is people have some genuine desire to build something real, but may also as well be very nice to, in the meantime, get some money off the table, profit from it, and then maybe you're still going to build something real in the long run, or maybe not, but at least you made money already, right? So it kind of doesn't matter that much anymore. So I think you have some of these dynamics. And then the other thing you have is when it comes to token launches, it's not very transparent, right? Like, so in theory, it should be very transparent, right? But in practice, it's not very transparent. Because probably the team is going to publish something about, X is owned by the team and X by investors, and then this much for airdrop and this much market makers and stuff like that. But in reality, how can you verify any of this stuff?
Mantra is a great example of that.
Yeah, Mantra, exactly. Like Mantra now, I should disclaim, I actually invested in Mantra at the start of last year. Mantra is, it went basically from nothing to like extremely high market cap, and then it completely collapsed. And what happened, it's not super clear. I mean, they have some explanation, and for all it's worth, probably it's true. I don't know. I wrote this around Mantra, right? When this big collapse happened. Now, I don't have a particular opinion or theory on exactly Mantra. It was more a kind of a general statement of what's possible. But so one of the challenges is that you can actually verify a lot of the, so for example, what is possible? Well, the team is going to create their token and they sell a bunch to investors, and all the investors have some lockups, and maybe the people have, they say like, oh, it's 1 year cliff and then it's vesting and stuff like that. But then there are other tokens that are going to be liquid. right? Because they say, oh, it's airdrop or something else. Well, who can verify who these tokens went to, right? Maybe the team could just give themselves tokens that are liquid, or their cousin or their mother or someone like that, and then they sell those tokens like immediately. And I've definitely heard rumors or people claiming in the last 6 months, year, of various high-profile networks that launched, and where the founder supposedly sold a lot of tokens, even though technically or supposedly they were supposed to be locked up. Now I don't know exactly is it true, and but I think that kind of stuff is happening. So yeah, I think there's a whole bunch of things coming together here that just lead to a lot of little bit questionable behavior. And I think that's also undermining a lot the trust in crypto and in new tokens. And, we have seen, I mean, I'm doing a talk this afternoon. And in one of the slides, you have like the proof of work versus proof of stake, right? And it used to be that proof of work is basically Bitcoin, right? The proof of stake is, all these other networks, And it used to be like proof of work was like twice as big as proof of stake. But now it's actually 4 times as big, right? So, all of these other coins have basically lost like half of their value relative to Bitcoin. So I do think we have a lack of trust and confidence in all of these coins for a variety of reasons. But I think this whole like shadiness around token launches is one of the reasons as well.
Yeah, and I mean, you have quite a strong background in the Cosmos ecosystem, and there's like another issue that a lot of Cosmos folks know very well is the lockup period. So you have like a lockup period, but in many cases you were still allowed to stake. And then what happened quite often was that you weren't allowed to sell, but you were able to stake it, and you had chains with an inflation of 120% or something, and you were able to dump all of the staking rewards. And I think we saw something similar also with Celestia. I mean, great team, great product, and so on and so forth. And then all of a sudden, the token price dumped because inflation was relatively high, market condition changed. And then I kind of think, and I would love to pick your brain on this, people were kind of pissed, It's like, again, same scheme that we've seen in 2021, great product on the forefront and everything, and then you just get rugged. Okay, fuck it, I just go into meme coins, because in the end of the day, it's also a token that somebody just launches.
I have opinions on this Celestia thing, and I actually really disagree with the general take on this. So first of all, right, Celestia did the last funding round at like 1 billion. Celestia launches, and it trades at like 2 billion, something like that, right? So now then it traded up to 20 billion FTB. And then it basically went down over, a long time, right? And today I think it's at 3 billion or something like that. Okay, investors were able to stake, and team members too, and then they were able to sell their staking rewards, right? Is that a bad thing or not? Well, first of all, investors are going to sell tokens, right? Like that's their mandate. Their mandate is to like invest, hopefully make a return, sell, and return money to their investors. And obviously they're doing this because they think the price is going to be higher, right, than when they invest. So that's just normal, right? So if they can stake and sell the rewards, what does it mean? It means they can sell some tokens throughout, right? If they can't do that, it means they can't sell any, but then the unlock comes and then they can sell a lot of it, right? So I think if investors can stake and sell the staking rewards, what it really does is it smooths out a little bit the sell pressure. Instead of having all of the sell pressure when there's the unlock, you have some sell pressure throughout, right? Now, why would somebody complain about this? Well, I can see why you would complain if you're someone who basically says, I'm going to buy the tokens in the liquid market, and then I want to sell it before the investors unlock. But then you're just doing the sort of pump and dump thing. Like, otherwise, why would you complain? It's actually better for you because you can probably buy at a better price. I don't know. It doesn't make any sense to me. This complaint, and I think that honestly, the current, it, I think it's the opposite, right? I think people who basically say, "Oh, we're going to prevent investor staking, prevent staking rewards from being liquid," they are just trying to temporarily inflate their token price to make things look good, and afterwards you're going to have all of the unlocks, and everything's going to come. And for people where there's no liquid rewards that can be sold, the sell pressure is going to be worse in the future, right? So I think you actually, it's creating more deception and inflating the temporarily the FDV more if you don't allow staking, or you don't allow liquid staking rewards. So yeah, I don't agree with the general take on this.
So you would say that the staking lockup module that was built by Mark, who's like one of the persons that I admire the most in the industry. So it's actually net positive to allow investors to stake like maybe a certain amount or like everything. So maybe you could also go ahead and say, hey, it's allowed to, I don't know, stake 50% of it, because in some scenarios, especially in the Cosmos DK world, we had like extreme scenarios where you were able to stake everything and you had like 120, 200% inflation in the like early days. So yeah, would you say that there's like maybe like a path or like a solution in between?
Look, projects can do whatever they want, right? Like they can say investors can't stake. They like people should do what they want, right? It's just that I don't, in general, agree with the take that investors not being able to stake is like a morally good thing, or is somehow making the coin more honest or better. I don't agree with that take. I think the general way that it worked for Celestia, I think, was fine. And why did their token go down so much? Well, because it was trading too high. Like, why was this thing trading at 20 billion? It makes no sense, right? It's like super early, immature. Like, I mean, great team, great ideas, but like, it's very, very early. It should not have ever traded that high, right? So now temporarily, the price trades at a very inflated valuation. Probably it's come back down to earth, right? Which it did, right? So there's nothing wrong with that, right? Now, of course, maybe you can ask, like, could the team have prevented it ever from trading that high? Maybe that would have been a good thing, right? Because now, obviously, some people would have bought at like 18 or 20, and then they've lost a lot of money since then, right? But, I mean, that's a speculative market, right?
Yeah.
Sometimes people are just going to trade that high, and yeah.
Yeah, maybe I think that's the right questions. Like also to ask, why are the valuations generally so high? So for me, like I entered the crypto industry in 2019 or something. Back then, Uniswap came slowly, and synthetics and these types of things. But the valuations nowadays, even if you kind of have like a strong narrative going on, like a relatively good product idea, the valuations tend to skyrocket very quickly, even though before a useful product is out, it's essentially just a white paper that people ape into, kind of a thing. So do you like maybe also view it as a problem that the valuations are generally just too high? Because you mentioned the Celestia example. I mean, I really love the Celestia product, don't get me wrong, but to stick to your startup comparison, in order to build a company that is valued at 3 billion or $20 billion, you just build a unicorn. You have like a lot of actual real users and a lot of traction, so that the open market values you like that. So what's your take on the current valuations of, industry-wide?
Yeah, valuations in crypto have always been a big, challenge. I mean, I've been in crypto since 2013, and even back then, you had like Litecoin, right? It was like very valuable. Why was Litecoin valuable? It was like just a fork of Bitcoin with some minor changes, and it made no sense, right? Like, and we had all kinds of coins over the years, like, XRP, Cardano, a whole bunch of coins, right, that would have very high valuations, invest a lot in marketing and a whole bunch of stuff, but actually had very little usage, right? Very little traction in utility. So I think you've always had that. what does it look like today? You still have that, right? You still have some of the coins that are extremely high, based primarily on marketing, community, some sort of vibe, as opposed to fundamental uh, traction. Now, what you've also had is a lot of coins that have come under tremendous amount of pressure, right? Like, so a lot of things are actually very cheaply valued, even when sometimes they have real traction, real usage. I mean, and a good example is maybe like Lido, right? So LDO is like 800 million valuation, which doesn't seem that high, right? Given that it's a protocol that has, I don't know, okay, the ETH price has come down, but maybe like 20 billion or something in stake in it, right? And, very substantial amount of revenues and, really short, like, so there are also other examples. And I think we're seeing a lot of mature coins, right? Trading at super low valuations. So I think we kind of have both. Uh, if anything, I think there is some trend towards people paying more attention to, the fundamentals, actual usage, and especially new coins, I think, struggling more to get to these inflated valuations. So I think it's coming a little bit more back to fundamentals, but yeah, I think it still remains the case that a lot in crypto is just very hype driven.
Yeah, and that leads us again to the starting point of this conversation. You can hype up your token, and I think my issue with tokens is that there's no real responsibility stick to it. You can launch an entity in the Cayman Islands, issue a token, or you do it completely irregulated. I mean, in the normal world, that's not an option. If you want to launch a startup and raise capital, yeah, you need to go to the local office, register yourself, and so on and so forth. They will look into what you have done before and these types of things. So that's like maybe like an underlying issue that we discussed already. But yeah, you also mentioned in your tweet that you don't know a solution for it yet. Has this changed over the past 2 weeks?
No, I mean, this is one point where I'm not a fan of regulation, but if there's one thing that like maybe the SEC could have done, or maybe could still do, is some kind of statement in like what kind of information needs to be shared by projects. For example, like the example of, okay, maybe a team can have some kind of tokens that you cannot see it, they don't tell people, but actually they're liquid and they're selling them, right? And who can verify this? So maybe some kind of, I mean, I know that's what Messari tried to do at the beginning, right? They had this idea that, we're going to have this, standard disclosure, standard information, and token projects are voluntarily going to do it. Now, that didn't work, right? No one actually is doing that. But I think maybe there can be something there to have some kind of standard disclosure, standard way that token projects share information. And then I do think that more kind of some return of ICOs would be a good thing. We are seeing that a little bit with, Echo and Legion. Now, I don't know how well those things work, because I think a lot of it is then also some kind of pump and dumps where people like get the tokens and then offload them first. But I think ICOs were actually pretty good. Certainly a lot of issues too. But if you look at something like the Ethereum ICO, I think it was actually one of the best, or Cosmos ICO too, right? It was like, I think one of the best ways of funding a project, launching it, getting a community. So I think some more return of that would actually be a good thing.
Yeah, I actually agree with that, and you see this much more in the industry, like voices are demanding more ICOs these days. But yeah, I loved how you said a couple of minutes ago that we always had these issues kind of. In 2013 it was Litecoin, then in 2018-19 it was Cardano. We always had like these types of issues, right? So now we are here in 2025 and we are still facing the same issues in that sense, just like in a different form, I would say. But do you fear that we are currently walking in circles, like that the one underlying problem that a lot of people criticize about crypto, with this intransparency, with overvalued tokens that get pumped by insiders? Do you think that we're lost the plot a little bit on that we that we are making circles for 10 years now? Because it's actually been 12 years now, to get back to your 2013 comparison. I mean, it's not a nice question to ask, but let's be real.
Yeah, I don't know. It's I see I see a lot of good things, right? So I think we have, for example, scaling was a big issue, right? Like, how can we scale blockchains? How can we process enough transactions? How can we make it cheap? How can we make it scalable? I think that's being solved, or has mostly been solved, or is being solved. Interoperability, right? Like, how can these blockchains work together, right? That's mostly being solved. Maybe not quite there yet, but it's close. Definitely going to be solved. So I think we have user experience, has definitely gotten better. So you have positive things. I think DeFi is cool, right? So I think it's cool how you have a lot of these different finance applications that can interoperate. You can do something there, use as collateral, doing something else over there. I think that's really cool and innovative. And, there's something free about it, is anyone could just participate. And so it has some of that original kind of like crypto ethos as well. And then I think on the negative side, it's just, why are people using crypto? What is there to do with crypto, right? I think today we see a lot of stablecoin stuff, RWA stuff, which has some of the characteristics crypto, right? Like stablecoins, anyone can like pay it across the world, and that's pretty cool. At the same time, it's not the thing that was originally set out to do, where people have actual sovereignty and ownership over it, because in the end, it's like a central issuer. It's in some bank, they could freeze it. And I think we also see that people care a lot less about self-custody, but, control, not your keys, not your coins, right? It used to be the kind of thing. People kind of forget about that, whether it's because they're using exchanges, hosted wallets, or now you have much more of these like ETF financial products where they're holding coins. So I think, you see some of both. You see progress, and you see also some of the original values that kind of get a little bit left behind. And then I think a big question is, what are the applications that people actually use on a day-to-day basis that involve crypto? And, that's still something where we didn't get that far, right? There's not that much here. Probably payments is one where there does seem to be a good amount of traction, and we may really see like on-chain payments get like mainstream soon. If it helps cutting out the Visa fee, credit card fees, and saving some money for merchants and for people, like that's a great thing. Although it's still a lot less ambitious than what the original vision was, Satoshi and of crypto. And to what extent that's going to be realized, well, we'll see. I mean, I think Bitcoin is obviously playing a significant role as a financial asset, even though the original peer-to-peer cash function that Satoshi envisioned is not really being covered by Bitcoin.
Yeah, there were like some pivots in between, but I think that's also new with that's also something that's usual with new technologies, that the vision might changes a little bit. I mean, all of the big companies also encountered this. I mean, Apple's most important device that they are selling is the iPhone and not the Macintosh, as it was a few years ago. So yeah, I think that's something usual with new technologies. But my last question is with regards to teams. I think that's also something very, very important to maybe round up this topic why token launches are scammers paradise. Like how I saw it specifically in the last 2 years was that a lot of new teams entered the industry, launched a very high valuation, also very young people, and then their bags were like valued at like a ridiculous amount because of the reasons that we discussed, valuations too high. And then my question is, do you think that's also like an issue? Because if I'm a founder and all of a sudden I get like the feeling that I already made it with my product because I look at my bag and say, wow, that's nice. My company or like my protocol is valued at 2-3 billion, and on paper I made this amount. The investors are also happy, but in the end we didn't really ship something, build something. Do you think that's also like an issue that the teams are also getting satisfied too early? Because as mentioned at the beginning, in order to reach these valuations in the real world, you will stick with your ass to your desktop for like at least 10 years, like most of the times until you reach that. And does it just get too, is it just too quick in crypto?
For sure. I couldn't agree more. Yeah, it is a big issue. Especially if then people can sell the tokens as well at these prices, which kind of ties back to the original tweet I wrote, right? Because then, yeah, you can totally have the case that, okay, someone started some protocol and now they made 10 million or 20 million from it, and it has a price, that was high, but now maybe it's coming back to reality, right? It's kind of going down, but I've already got like 10 million out or something. And you realize maybe you overpromised some things. Maybe the things that you said you were going to do, they're actually really hard, right? And then you have a hard choice, right? You now spend like years working hard trying to make this a reality, or maybe you're just like, okay, well, chill, like it's fine, right? Like whatever, doesn't work out. I mean, I think what we also have, maybe some people don't know about this, but in 2017 and 18, you had various people who raised like big ICOs, and then they raised a lot of ETH, and it's not uncommon. I think many projects then did that. They're just like, oh, we'll just stop working on this thing, right? We'll just keep the ETH we raised and forget about this token we're supposed to build. And then, turn this into some sort of family office or just use it as their own money, right? So I think that happened. And obviously that's pretty, like that kind of thing doesn't work, right? In a traditional startup, right? In traditional startup, it's like, oh, the company raises money and the investors have shares and they have some protections. And the founder cannot just take the money and like say, okay, we're working on this, forget about it, and it's all mine now. But in crypto, that certainly has happened, at least in the 2017-18 ICO area. I think it's not uncommon that projects did that. And yeah, that's of course, it may not be legal. It may not be illegal, right? I think it probably depends on what legal structure they had, but it's definitely very unethical. I mean, it's kind of like theft, right? Like, I mean, the ethical thing to do in this case should be you return the money to the people who bought your token originally, right? And you say like, okay, I tried to build this thing, didn't work. Here's your ETH back.
Yeah, totally agree on that. And then there was just, if you still have like a minute, I still have one question. Because Chorus One is not only validator, you also have a ventures arm. And I was just thinking about last year's token, 2049 in Dubai. There was like so much excitement going on, and you have seen how people raised like enormous amounts. And I was like, I was always like wondering, okay, there are like so many VCs that I always looked up to, that I always seen on all of the podcast shows, and I was always thinking, wow, these guys, they are so smart and whatever. And I was like really confused. I was like, am I stupid, or why doesn't it make sense to me that this chain is worth $1.5 billion before it even launched and before we even have a launch date for that? Am I the stupid one in this equation? So are you also often surprised or is there like any particular reason why you see like kind of this domino effect as one lead investor joins around and then all of the other VCs join and you see these crazy valuations? Do they make sense to you? How do you feel about that? And maybe what's your vision on this with Chorus?
Yeah, I think a lot of these valuations don't make too much sense. I think they derive from also VCs having a lot of money, right? Some of them raised huge funds and then they have to deploy it, right? And then you're like, well, there's limited opportunity and like, well, this project looks pretty good, looks pretty hot. So like, can we give them 100 million, right? But then if we give them 100 million, then like obviously the valuation has to be like high and then people chase for those deals. And of course, you also have a dynamic that I don't know. Maybe you're not aware of it, or maybe a lot of people listening are not aware of it. But basically, if you raise a VC fund, now you raised whatever 50 million, 100 million, some amount in a VC fund. Now you're gonna invest that money over some period of time. You know, it may be like 3 years, and then you're going to start at some point you're going to start getting liquidity, right, selling it and returning money to investors. But generally you are going to try to raise a second fund before you return any money to investors, right? Because you've deployed all that, you don't really know the results yet, but it's your job, right? So you raise another fund. So a big part of the VC game is really you have to get to raise a second fund, right? And like, how do you raise a second fund? Well, you need like markups, right? Ideally, right? So if you invested at a coin at 50 million, some other investor invested in it at 1 billion, then, you can say on paper, like, oh, I'm up 20x, right? So like my fund's doing really well. So give me money for my next fund. So I think that is a lot of the dynamic, right, that was going on. So a lot of investors, even if they didn't return money, right, they were able to raise bigger funds like that. But I think that has really changed now, and the environment for fundraising for VCs has been very difficult. And I think a lot of VCs are having a hard time raising new funds, or they're raising new funds that are much smaller. So I think we are going to a world where actually there's going to be less capital. There's going to be less VC money going into crypto. I think it's because, the returns for VCs have been bad. Many of them are not doing great. The kind of traditional investors, LPs, they're more interested in AI or in other fields, so they want to put money there. Or if they like crypto, they can just buy like Bitcoin ETF, right, or Solana ETF. They don't need to invest in VC funds. So I think, we're going to have like less capital in crypto, and that is going to have its pros and cons, right? Like, I'm sure valuations are going to be lower and it's going to be harder to fundraise, but it may also mean that investment opportunities are going to get better, and you're going to be able to invest in, better teams that have to work harder at like better valuations. So it can be very good in the long run, but I do think it's gonna make for a challenging environment in the next, 2 years.
I think actually for me that would be the most bullish thing for crypto, to be very honest, because that was like my feeling in the beginning of last year, 2024. All of a sudden everyone was bullish and I was like, nothing really changed. Like there wasn't like much significant innovation going on, similar to what we have seen coming out of COVID with DeFi. I mean, DeFi was like, wow, that was like a huge milestone. But I think that the crypto industry was just flooded with money, and there was like too much money but too little projects, like high quality projects. So I think this is like more or less what we have been talking about, that the that money in the market versus great teams and great products, that there was like a mismatch number wise, leading to higher valuations, and then opening up everything by letting everyone launching a token led to this dilemma that lots of token launch with like a ridiculous valuation, right?
Yeah. So we'll see what happens next.
Great. Thank you so much for coming on, Brian.
Thanks, Yuri. It was great.